Stocks recover after an early slide amid concerns over high domestic inflation. Strong U.S. retail sales and weak cues from China. IT and realty eke out gains, while metals and banks and consumer durables drag.
Infosys inks a €1.5 billion deal with Liberty Global for 5 years, with the possibility of expanding to €2.3 billion over 8 years. The contract requiring it to take on 400 Liberty employees can be margin dilutive, analysts say.
M&M unveils its new electric brand identity, showcases two EVs, a pickup and its lightweight tractor range Oja at Cape Town. The new tractors are seen driving future growth of the farm equipment business for the company.
And part of the founding group, the Gangwal family sells about 4% stake in Indigo Airlines in its third such transaction, bringing its holding down to 26%. A 150-day lock-in prevents any further dilution for a bit.
And ITC cigarettes and FMCG businesses turn in a good show. The company also says that shareholders will get 1 share of the hotel's business for every 10 shares in the company. The stock sees some green. Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. Pavitra, good afternoon. It has been a weakish day of trade to really begin in a truncated week, then after coming back from Independence Day celebrations. Well, at the moment, Nifty 50 has broken up above the 19,400 mark once again. Another attempt. So yes, trying to recover from the low point of the trading session. When we talk about Sensex, it has lost 60 points at the moment and almost on the flat line with a negative bias. It's the Bank Nifty which has taken most amount of drudging, more than 0.5% down, and some of the big banking names are also a drag on the overall market. Mid-cap is a spot of better health for the market, with the mid-cap index being in the green, but right now only in the flat line, but outperforming the other indices. When we talk about advanced decline ratio, well, mid-cap universe is keeping it stable in favor of the advances by a small margin. On my screen right now, Apollo Hospital, Infi, NTPC, Ultratech are some of the top gainers for Nifty 50, while HDFC Bank as well as other big bank counters are really dragging the market, Pavitra.
Oh, absolutely. I mean, like you pointed out, it's been a down day, but there's been quite a recovery that has played out, right? Almost 100 points on the Nifty, and that's definitely not bad considering what's going on in the global setup as well. A lot of the Asian markets are down between 1.5% to 2%. The Hang Seng market has been under pressure since the morning of the Kospi, which is trading with a 1.8% cut as well. So, you know, in that context, it's not too bad at all. What is doing well, it is really tech once more. So you have, of course, Infosys in the back of news, but the rest of the heavyweights also doing quite well. In fact, even the mid-cap tech companies, something like a Nucleus was up 6-7%. So a bunch of those also holding up quite well. And then you have Pharma, which has come to the rescue once again. So names like Sun, Cipla, in addition to Apollo that Nisha mentioned, doing very well. Defense once again is, you know, up and about in trade. On the downside, it has been the metals pack, which is under pressure. And once again, you're seeing that for the week, it's already down over 3%, this index, and you have names like Tata Steel, Hindalco, which are some of the top gainers in terms of the Nifty action. So that's what's happening in terms of the market moves. We'll get you more on that, but first up, let's talk about that big headline where India's July inflation came in far higher than what was expected at 7.44%, of course led by that big jump in vegetable prices. So Lata is here with all of the numbers this time around. Lata.
The surprise part of the inflation was that way higher than expected, 7.44 against our pool of 6.66 and a maximum of 6.8 that we got on the range. But the relief is that it's almost entirely because of vegetables rising about 38% month on month. If you took 7.4, which is the July inflation, compare it with 4.8, the June inflation, the difference of 2.6 percentage points, 2.3 percentage points was accounted for by vegetables, which is the relief because these are short duration crops and we could perhaps already see tomato prices receding, and that could take other vegetable prices low. But the niggling worry is that cereals have also increased, and those are a little sticky. Cereals were up 13% year on year, and even pulses were up 13% year on year, and pulses, the net sown area is actually less. Rice is more in terms of sown area, but there are uncertainties of monsoon. Too much in some rice growing areas and too little in other rice growing areas in the east. So that is a spot of bother. The positive, the counter is that core inflation has come in 4.9. Now, core is that which can't be influenced easily, non-food, non-fuel. That which can't be imported very easily as well. So that the core inflation is falling is a very, very big positive, and that can, logically take the headline inflation lower. Nevertheless, you have to worry. This is arithmetically very big. So the Q2 inflation number forecast, which was raised to 6.2 by Reserve Bank, will have to be raised to 6.8 or thereabouts. The full year has to go up to probably 5.6 from the already higher forecast of 5.4. All this means that you can't expect rate cuts anytime soon. Even in April next year, the Reserve Bank will be going into the MPC with a last number of, 5.2 or even higher. And therefore, to expect rate cuts anytime before June or August looks unlikely. That's what is keeping the rate sensitives somewhat under the weather. There could be tightening of liquidity by Reserve Bank, even if they don't raise rates, like the incremental CRR. That is negative for banks and possibly even for NBFCs and interest rate sensitives. We would know how the markets will react only tomorrow. The money markets, both bonds and forex, being closed for trading today.
All right, Lata, thanks a lot for taking us through all of those numbers. In fact, on this, we also spoke with Neelkant Mishra, the Chief Economist of Axis Bank and Head of Global Research at Axis Capital, to know more about the core inflation data and the impact of inflation on the interest rates. Let's listen to how he would approach the market at a time like this.
The most important takeaway for me from the inflation report was that the core inflation number was actually better. And I think that's what we need to focus on. This expectation many had that interest rates will start falling early next calendar year, I think that was totally misplaced. And thankfully, that expectation is now getting corrected. The fear that this will necessitate another round of rate hikes is something that I, again, don't buy into. We have to remember that MPC is now targeting 4% inflation at the midpoint, so it is 4 plus minus 2. There was a belief that the moment inflation goes below 4, the RBI will start cutting, MPC will start cutting. I think that was an irrational expectation to start with. And therefore, I think rates will stay on hold at the repo level for quite a while.
All right, looks like experts say that interest rates will stay on hold, but as Lata said, there's no chance of an interest rate cycle recovery or a turn because of the inflation numbers. All right, let's get into some stock-specific action today. And Indigo is under pressure today following today's large block deal coming in and the supply side pressure really showing on that particular counter, over 3% down in trade. Sonia is right here to give us all the details. Sonia.
Oh, thanks a lot for that. It seems like it is the season of promoters selling stake, right? So the Gangwal family, in what is the third tranche of stake sale by them in Indigo, have gone ahead and executed that order. So let me first give you details. There was a large trade, a 2 crore shares trade that took place where 5.1% equity changed hands, worth almost 5,000 crores at an average price of 24.30. Now, what happened is the Gangwal family has, as a part of the third tranche, sold a part stake in the company. Now, post this, the Gangwal family that earlier held about 29.7% stake, now the stake comes down to about 25.7%, which is equivalent to almost 25,250 odd crores. The market cap of Indigo, though, after the big surge that we've seen, has almost hit 1 lakh crores. So today, of course, the the overhang is because of the promoter selling stake. But the largest story is the growing business of Indigo. The stock is up almost 40% in the past 6 months. The company now has almost 80% market share in some of the monopolistic routes. And, they, in the last reported numbers, they reported record high EBITDA as well as revenues. So it's a very strong business. Hence, after the overhang today, you may see some buying interest in the stock return. Now, if you look at it, there are a couple of things working for them. Strong domestic traffic going ahead, lower fuel, favorable yields is what's aiding the earnings, as well as a lot of bulls on the street. So Citi has a buy. They've raised their target price to 3,400, which is a big upside to the current market price. Macquarie is almost at 3,000 as well with an outperformed rating. Back to you.
All right, Sonia, thanks a lot for taking us through those details on Interglobe. But with that, let's also bring you another important story. The market regulator, SEBI, has barred Zee promoter Puneet Goenka from holding the position of managing director in the merged Zee Sony entity. And sources are now telling us here at CNBC-TV18 that promoters are looking to appeal against this order. Yash is here with the details. Yash, what are you picking up on this?
Well, Pavitra, basically with this story, we are back to square one. And why do I say that? Because this entire process between SEBI and the promoters of Zee Entertainment, that is Puneet Goenka and Subhash Chandra, started with the Securities Appellate Tribunal or SAT. Market regulator SEBI in its order barred both of them, Puneet Goenka and Subhash Chandra, from taking any KMP position or a position of directorship in any listed Zee entity. That was back then challenged by the promoters before SAT. The SAT upheld SEBI's order and told the promoters to convince SEBI to vacate the order, and SEBI will have the final call in the matter. SEBI's taken a final call, which is to continue with its order against the two promoters. SEBI said that they'll take about 8 months to complete the investigation in this process. But what we've been given to understand is that the promoters are expected to knock at the doors of Securities Appellate Tribunal yet again, challenging this very SEBI order from this very SEBI order against them. What we've been given to understand is that this challenge is expected to happen sometime this week itself, and this is particularly important because as far as the merged entity is concerned, which has received all approvals on the regulatory and the judicial side, requires Puneet Goenka to become the managing director and CEO, but SEBI's order at the same time bars him from taking that position. So it will be very important to see what challenge comes. What we've been given to understand is that the prayer is expected to be that if SEBI takes 8 months to investigate the matter, you cannot keep Puneet Goenka out of office for those 8 months, and hence a stay on this particular SEBI order is expected to be sought by the promoters of Zee Entertainment from the Securities Appellate Tribunal.
All right, Yash, thanks so much for giving us all the details. And the stock is on the flat line. So the biggest takeaway is that there are more legal options which Puneet Goenka is likely to explore to keep his position in the merged entity. While on the other hand, remember, the stock is at the moment on the flat line and has not seen a knee-jerk reaction, also because of the positives that come in because of the NCLT clearance given to the merger, which is on its way. Let's take a quick short break on that particular note on Business Lunch. But when we return, we'll get you the latest updates on the monsoon mayhem in Himachal Pradesh. Stay tuned for all the details.
Welcome back. You're still tuned into Business Lunch, and the market is just looking like it's about to break into the green. The mid-cap index already has those 30 points in the green right now, near 300-point recovery on that one, and the Nifty is also just around 10 points in the red. The banks, which continue to be under pressure, have still recovered 300 points, from the low. So don't lose sight of the market. But in the meantime, let's talk about some important global cues that we're tracking this afternoon. Headline inflation in the United Kingdom cooled sharply to come in 6.8% on a year-on-year basis. Now, this reading was pretty much in line with what the street was expecting and follows the 7.9% figure which we saw last month, that is in June. Now, on a monthly basis, headline CPI decreased by 0.4%. This is versus a consensus estimate of a 0.5% decrease. If you look at the core CPI figure, that came in at 6.9%, unchanged from what we saw in June and just slightly above the consensus forecast of 6.8%. So that is also important to track in terms of the inflation data from the UK.
Oh, that's right, because all the central banks across the world are moving in tandem in one direction, and inflation is the biggest worry. So from Europe to some important macros we are tracking from Asia as well, and new home prices in China fell for the first time this year in the month of July. Now, the latest in a string of downbeat data, well, among 70 cities, 49 saw a fall in new home prices month on month in July from 38 cities the previous month. Now, remember that this comes after China reported weak industrial production, retail sales and fixed asset investments for the month of July. In fact, China has stopped releasing the youth unemployment numbers, which had soared to record highs in the recent months. Now, the Chinese central bank, in response to the incoming data, unexpectedly also cut a key policy rate for the second time in 3 months on Tuesday. So that's what is developing in China's economy.
Okay, those are some important cues that we're tracking from the global markets. But let's now also bring you the national developments that we're looking at. Heavy rains continue to lash Himachal Pradesh. We now have around 25 people, including children from the Kangra district of the state, due to the swollen Beas River, who have been rescued by the National Disaster Response Force. Rescue operations, in fact, are still underway in several regions of the state. And heavy rains over the past few days have resulted in extensive damage across the state. 2 individuals also lost their lives in a fresh landslide that took place in Krishnanagar of Shimla, which is amongst some of the worst hit areas. At least 60 people have died since Monday in rain-related incidents.
All right, so that is quite a trouble in Himachal Pradesh, and it's still not come down the kind of impact on the people and the livelihood over there also. So a word on that, but with that we'll slip into a short breather on Business Lunch, but come back for more. M&M unveils its new electric brand identity and showcases new launches. We get you more on that from the event in Cape Town on the other side. Stay tuned. Welcome back. You're watching Business Lunch. Keep an eye out for market recovery at lunchtime. Looks like it's energized. But we'll talk about M&M. Well, M&M has outlined its strategy for electric vehicles and farm sectors and has also launched a new brand identity for all future electric vehicles. Now, revelations also include a new range of lightweight tractors under the Oja platform, a brand new electric pickup truck and the all-new Thar. My colleague Parikshit Luthra attended the event in Cape Town, South Africa, and here are all the highlights from that event.
Here in Cape Town, the Mahindra Group has outlined its future strategy for electric vehicles and the farm equipment sector. Starting with electric vehicles. Now, this is a time when electric car sales are picking up and they could cross the 1 lakh mark. Mahindra has only one electric SUV in the market right now. Next year will be the E8, which will hit the markets in December 2024. What they have done, they have unveiled a new brand identity for electric vehicles, an infinity loop logo, which will be carried by all future electric vehicles, including born electric and ICE vehicles, which are converted into electric in future. This is to differentiate the EV portfolio from the ICE portfolio, which will continue to carry the Twin Peaks logo.
This is really about customers wanting to make this leap. We believe that this new identity, which has circularity, all of that built into it, infinite possibilities, very well expressed with the term Le Chalang.
They've also showcased a production-ready BE05 electric SUV to show that they are ready with an electric SUV for the market. Behind me is an electric Thar, a 5-door electric Thar, which could come to markets after 2027. This is also an indicator of the 5-door ICE version of the Thar, which will hit the markets next fiscal.
We will productionize it. We haven't put a date out yet, but it will come to life in, at an appropriate time. Right now, we have our hands full getting our first 3-4 EVs out, and as we get going on that journey, we'll definitely look at a timeline for this as well.
The company has also showcased the Oja range of tractors. Now, these are ICE tractors exclusively in the farm segment. And this will be important for the Mahindra Group because these are lightweight tractors that have been launched to target farmers in the horticulture sector, orchard farming, those with smaller land parcels, not just in India, but in ASEAN and US. And the company believes that this will be important for driving their market share, driving the next phase of growth in the tractor segment.
Oja, in a manner of speaking, is a key element of our strategy to go global. The Indian market in tractors is intrinsically different from other parts of the world. The Indian market needs tractors which are heavy, which are very durable, very robust, and the global markets are different. there is a huge opportunity for lightweight tractors because that's the kind of application that's there in many parts of the world, especially in horticulture and segments of that kind.
All right, those are the very exciting plans that M&M has in terms of the launch pipeline. But with that, we're going to wind down in this edition of Business Lunch. Thank you guys very much for tuning in. We have mid-cap radar after this short break.